The month of October was quite an interesting one in the real estate world. The month started with bright spirits as mortgage rates dropped to their lowest point since January of 2023. However, these lower rates didn't last that long. Throughout the month of October, the 30-year fix went from around 6.2% to ending the month just over 7%. So, how did this roller coaster of mortgage rates affect Irvine's housing market? The fruits of September's rate cuts and overall higher levels of demand we saw last month were shown in October's sales data. The amount of detached single-family homes sold in Irvine increased for the second month in a row as we saw 71 homes sell. And this is quite rare for this time of the year. Historically, we see demand levels and overall sales volume both decrease through quarter four. But this was a great example of how big of an impact rates have on today's buyers and the overall housing market. The drop in mortgage rates didn't have sellers running to list their homes for sale nearly as fast as buyers were running back to the market to buy them. The amount of detached single-family homes for sale in Irvine decreased to an average of 188 homes in the month of October, and this followed the historical trends. We should continue to see housing supply levels decrease throughout the back part of this year as families shift their focus to the holiday season. So, demand increased, supply decreased, and Irvine's housing market continued to break basic economic principles in the month of October. Despite the higher levels of demand and decrease in supply, average price per square foot decreased for the fourth month in a row, and now sits at $915 a square foot for a detached single-family home in Irvine, which might not make a lot of sense economically, but it does follow the historical trends for this time of the year. As we head into the last 2 months of 2024, there are so many variables playing a role in how Irvine's housing market will finish 2024. The biggest is likely mortgage rates, and October sales data was a great example of how immediate of an impact lowering rates has on Irvine's market. If we were to see rates drop one more time, we will likely see the market pick up again. If not, it will likely follow its historical trends and trickle off to end 2024. The second obvious factor was the United States presidential election, which took place this week. The re-election of Donald Trump will definitely have an impact on the U.S. economy and overall housing market. In the past, election years have proven to be strong years for the housing market in Orange County. In 2013, we saw home prices increase by 19%. In 2017, they increased by 7%. And most recently, after the 2020 elections, we saw home prices increase by 21%. These two factors are just the tip of the iceberg in what determines on how the housing market performs. So let me know in the comments below, how do you think Irvine's housing market will finish 2024 and what will happen in 2025? If I don't hear from you, I look forward to getting to bring you the next Irvine housing market update. Cheers.